Great to be back and fill in this week when Jeff is out of the country on assignment. My guest this week is Elaine Kub from ARC Consulting. And Elaine, it's good to visit with you again.
It's good to be here. Thank you.
Let's talk about what's happening in the grain markets. There was a crop report came out this week. Give us a little summary of what happened. Pretty much same old story?
Well, they didn't make any big changes, which was sort of surprising, I think, to some of the market in the sense that they didn't change any yields, for instance, and we know that this has been a very dry spring. We had a dry winter, so we don't have a lot of subsoil moisture, and there are certain areas of the Corn Belt specifically that are really starting to suffer and are starting to see, crop failures in some fields, let's say in northern Indiana, but just crop stress on a wide swath of the Corn Belt. So you would kind of expect to see, or you would feel as a farmer or as an agronomist, that there will probably be lower yields in a big part of the Corn Belt. And yet the USDA in June, in their June report, that'd be really early for them to make any sort of changes. So the market trades on these big numbers, a 166 bushel per acre projected average yield, which seems very large at this point. But that's what the market traded on, and so we had a bearish reaction for corn on Tuesday after the crop report, and a bullish reaction for soybeans because they did tweak the ending stocks for soybeans even tighter. So we're at 4.3% stocks-to-use ratio, which is very, very tight inventory situation. Talking about that, how did the South American crop come in? Is that feeding into this tight stock situation? Yes, that's the primary reason why the soybean stocks-to-use ratio has been cut, but that's been the case for a couple of months now. So that's not new information. It's just trading on more of that. And the reason that it got tweaked lower for the U.S. domestic stocks-to-use in this past report was because they adjusted the old crop ending stocks a little lower, which means that we've been crushing a considerable number of soybeans. What's happening out there on a day-to-day market basis in terms of the cash markets? First for corn. Well, it's been really interesting on a day-to-day basis in the futures market. We've been reacting almost exclusively to the outside markets, to the dollar, to the Europe. We have investors that just don't want to be in any sort of risky market, and commodities just are a risky market. Right. So we have people who don't want to be involved in that on a day when you're concerned about the European banking situation or when the U.S. dollar goes up. So that's been driving down futures prices quite a bit while the dollar's been going up and a bounce when the dollar stays off of its high. But in the cash market, that's not reality. We really are short on old crop corn, for instance, and so we have situations of record high, unseasonably strong cash basis levels compared to the futures price. So will that continue till we see a new crop come into the elevators? Well, it's a really tricky situation for elevators right now because they have to make their basis bids off of the July contract, which is really the only remaining old crop futures contract because September contract is being treated as a new crop futures contract. So July is going to go off the board or go into delivery in the next couple of weeks. But you don't want to be holding a short July futures contract and have to deliver on a futures price when the actual grain is worth 50 or 70 cents more than that futures contract. So now we have a situation where there's a very volatile July futures contract, makes it very hard for elevators to be putting together a bid. And if farmers are hedging their old crop against the July futures contract, they also have to be really aware of how volatile basis or how volatile that July contract is going to be for the rest of the month. And I wouldn't want to be in it in the beginning of July when it's in delivery. So if people are cleaning out their bins, getting ready for the new crop, check day to day to see what's going on at their elevator? Absolutely. Be very, very conscious of the basis changes in the overall cash price because that's what you're going to be looking for, yeah. Soybeans, as you mentioned, we do have tight supplies there. What does that look like the rest of the summer? Well, on their own, you could say this is a bullish market. It's a very tight supply and demand situation, but really that's the market that responds more than any other to the investors' reaction to the dollar or to Europe. And so as far as the price outlook, it's really hard to say. We have an election coming up in Greece this weekend that will give some guidance to how stable the European situation might be. We have a federal open markets committee could put some more money in and really grease up these commodity markets over the short term. So there are a number of things that could happen in either direction to be very volatile for prices. So if you want to do some forward pricing, it's going to be volatile, but you recommend doing some pricing now? I do. I mean, if you look at the new crop futures for soybeans, they're over $13 at this point. Historically, it's not been a bad idea to sell soybeans over $13. Right. So if you don't have any sold yet, I personally would recommend having, a good chunk of them sold up to let's say 50%. Let's say you're confident that you're going to be able to raise them, that you're in a portion of the Corn Belt that has had decent rains. So you would do that, and if you still feel that the market might straighten out and we might see $15 soybeans in the next marketing year, I think that's a possibility, but there's so much risk of this becoming another 2008, of the whole economy just really crashing down, that I think you'd want to have some kind of coverage.
Quickly on corn, do some pricing of new crop corn.
Same situation there. I think it makes good risk management sense to have a floor underneath you, certainly on the number of bushels that you feel confident of being able to raise, because there is just so much outside market risk at this point. But on the other hand, I mean, you can look at this and feel very bullish about the market just on a weather situation. If we get into a weather market at the end of this month and into July, if we start reacting to the dry weather, you know, this could be a very bullish situation.